This series, we're growing a Robinhood account from $0 all the way to 1 million, and I'm going to show you every step of the way how I get there. So today in the account, there's a lot of volatility in the market. We ended at $6,300. You can see we had some pretty big swings. We're still net short the market, but on the week, we're only up $175. So we haven't made much progress, but in this video, I want to talk about what's ahead in the market. We have inflation with CPI data coming out tomorrow, as well as bank earnings. And then a bunch of other companies are reporting next week. And then we got Trump's inauguration. So to give you a kind of a roadmap of what I'll be looking at over the next couple days, is really comes down to CPI. So you can see that tomorrow at 8:30 a.m., we will have a CPI readout. That's consumer price index. It's how much inflation there is. And then we will also have JP Morgan, Wells Fargo, Goldman Sachs, and a bunch of other banks. These are reporting all before market open. So there's a ton of data coming out, and the market's going to react to all that data. And if we look at a couple different scenarios, CPI being the most important, if CPI is over expectations, over their forecast, then the market is going to sell. This is because if inflation is running hot, the Fed can't lower rates, and lower rates will provide more liquidity into the market and will force stock prices and all risk assets higher. But if inflation's running hot, then the Fed can't lower rates, and therefore the market will sell and bond yields will go up. And then you have the opposite scenario. If inflation is cooling off, it's below expectations, the Fed could maybe lower rates sooner at some point, and the market will take that as bullish news and it will rally to the upside. And then if it's at expectations, I think it's more of a toss-up, but we'll probably look towards the bank earnings and their forward guidance to understand what they're looking at over the coming months and quarters and years, and we'll trade probably based on that. But if the market does sell, I do want to give you guys some really good setups that I'm going to be looking at, as well as even if the market does bounce, we're not going to chase after any moves, either to the downside or to the upside. We're going to wait to either resistance or support trades and then play the bounce off one of those levels. We never want to be chasing the market. So looking at the SPY, there was a lot of volatility today. This is pretty common before big data comes out. You can see we actually swung like 1% in both directions multiple times and then closed flat and on a key level of this larger wedge pattern that played out. And so really that's just to confuse the most number of investors. And when data comes out tomorrow, we'll either push likely to this upside back into this wedge, and that level, depending on where it hits, around like this 592 to 593 level, that could act as resistance and we could play a rejection. What I'm really hoping for, though, and this would provide the most number of opportunities for us to make a lot of money this week, is CPI is hot, the market sells, volatility spikes, and there's more opportunity to play a bounce. So if CPI is hot, I do expect this 576 level to be taken out with really high probability chance of that happening. The next level is this 571. And then I'm looking as well at 566, 565. And if volatility is really high, then we might even have like a wick candle down to this 561 level. That would be the most ideal scenario. If it wicked down there, I would just be buying calls for a bounce. But this 566 level is also a strong level, and I'll show you why I think that. So obviously we like to look to the past to see how the market has traded. Not looking at anything, if we just remove all the drawings here, you can see that price likes to react. The candles bounce off certain levels. This is like right around 568, but there's also a lot of candle rejections around this 565, 566 level. Then if we throw on the volume profile, so we can see where volume trades relative to the price level, not by time, You can see that the point of control is right around this 571 level, which is a high volume node. So there's a lot of business that's done at that 571 level. But more importantly, if there's a lot of volatility, we will likely test this level. And if this 566 level, if there's high volatility, I'm really looking for that level because 571 is not that far away from a percent drop from current prices. But 566 is kind of that sweet spot. And it's acted as support multiple times with plenty candle reactions as well as levels of resistance. So not only is it a low volume node where price will move quickly through that section, but it can also act as support. So really the peaks and the troughs of the volume profile are usually key levels, but then you also want to match it with candle reactions. So like 571 is a good one just because you can see it's bounced and pushed from this level a few times. But this 566 level has a lot of confluence, a lot of candles that have rejected, a lot of reactions. So that's really a key level. And then this 561 is a bit lower. It's also acted as support. This is more of like a sneaky level. If VIX really spikes, I do expect more of like a wick. If you think of a candle, it'll wick to that 561, rope in a bunch of bears who are buying puts and shorting and shorting and shorting. There'll be a selling climax with high intensity of panic, and then there'll be no more sellers, and then we'll have a push to the upside. So that's really what I'm looking for in a sell, is to play the reversal. I want to play SPY calls. I want a bounce to happen, or a more safe option is to short volatility. And usually what I like to do is I like to short UVXY. This is a leveraged VIX futures ETF, and it has a really high drain on it, a high expense ratio, and so it just naturally goes down over time, which is the same thing with volatility. So if we look at UVXY, you can actually see here that every time it's come up to this like 30 level, it's rejected. And so if we get a sell, I'm really expecting us to hit this 30 level at some point, and then you see what happens. It has this swooping downtrend after it reaches that level. Information in the market gets digested, volatility heads lower. And the great thing about shorting volatility is that the price doesn't have to go down. You would think that volatility and the SPY move in opposite directions, but that's not always the case. It's possible that SPY could drop and then just go sideways and volatility would head lower because volatility is unsustainable. So I do expect and hope that we will actually sell, volatility will spike to the upside, and then it's a really easy option to just buy UVXY puts or short UVXY. And you can see here that it almost always drops back down below like 26. So that's probably like where I would buy puts, around like 26. And even back in the Japan unwind with this carry trade back in August, you can see volatility spiked to $69. Well, if you were buying UVXY puts, even down here, say you bought down here when it was at $39, $40, even if you're buying puts down to like 34 or 30, you can see that in a short period of time, all that news got digested and UVXY dropped all the way back down to 21. So even like in a 2-week period, you would have had plenty of opportunity to short UVXY or buy UVXY puts. And if volatility actually ever got back up to the 68 level, you'd really want to be buying UVXY puts, maybe even down to like 40, because you know that it's going to drop because it's not sustainable. So those are what I'd be looking at to play the bounce in the market. And a few other little tips and tricks that I'm going to show you is we'll cover a trade that I did today. This was on Tesla. So on Tesla, we had a really strong push to the upside. Same thing with the market. PPI data came out and it was actually below expectations. And PPI is a purchaser's price index. And that's like the cost of the raw materials that go into products. And usually that's like a leading indicator of inflation. And so weirdly enough, the market did jump on the news, but at the same time, bond yields actually kept going up and the yield curve steepened. And that's kind of gave me the inclination that this pump from the news was fake. I knew it was like a fake out, right? And Tesla had this really strong push on Monday. It came all the way back up to this upper end of this wedge. So I really like to play and trade based on patience. I want to wait for that perfect price for me to buy a position, right? I don't want to enter when like price is in the middle of this wedge that formed, right? I want to wait till it's at the optimal price for me to enter. And it's kind of scary, right? So like price was pushing higher in the morning, and I saw that there was this upper bound, this upper trend line, as well as the fact that we were forming this wedge and we already had a reaction from this candle to that candle. And so I knew that there was going to be a rejection zone here. And there's also like a somewhat of a low volume node. But there was a high confluence of me with the PPI data, the yield curve steepening, and then us hitting the upper end of this wedge to actually buy puts. And so I bought puts right at this candle, right around 422 on Tesla. I bought $400 puts for this week, and we rejected and headed lower. And you can see it came back down, bounced a few times, then ultimately pushed lower. I took profit and actually spread my position, which is another interesting strategy. So if you buy puts, you can actually sell a lower put to take your profit out and still have a position in the market or on that stock. And so that's what I did. And I can actually show you here how I set this up. So when Tesla was trading at 420, I bought this 400 put. And you can see I ended the day up 207%. It cost me $4, and the current price of this put is $12.28. Now, I didn't know that Tesla was going to keep selling. I had like an inclination, but I wanted to take profit out, right? I don't have that much money in this account, and so I don't have the luxury to hold on to these positions. I just want the best entry, and then I want to take profit when I can. And in this scenario, what I did is I sold a put. So I took this put, $397.95, and I sold it for $4.60. So I bought a higher put for $4 and a lower put for $4.60. And so I received $60, right? Spent $4, received $4.60 times 100, that's $60. And I still have this position open, right? So if by the end of the week, Tesla is trading below $397.50, I will collect $250, the distance of the strike, and I already got the $60. So I'll make $310 as long as Tesla is trading below $397.50 on Friday. So I expect to close out of this position at some point this week and try to maximize that, collect an extra $200, $250 on this position. And so that's like an interesting way of you can play these different strategies with options. You don't have to just enter into a position and then take profit. You can sell another option to actually create a spread. So what we call that is a ghetto spread. And I did the same thing with IBIT today. And this was because I saw that Bitcoin was trading. Let me show you here. So Bitcoin was doing a similar thing, right? It was trading in this descending, broadening wedge. And I saw that it was reacting off this level. And so I bought IBIT puts right when it hit on the top of this level. I saw that often it would come back down to this $96,226 level or $96,100. And so as soon as it got down to that level, I'm not trying to think any deeper than that. I'm not going to sit here and try to hope that this breaks this longer term uptrend and it heads lower. What I did was I just sold a lower put, right? So I bought a higher put strike, and then I sold a lower put strike. And now I have a cheap spread on IBIT. If the data comes in hot tomorrow, Bitcoin will break down, head lower, and I could potentially collect I believe only $100 on like a $5 risk. So that's like 20 times the amount of the money that I'm risking for the week. And it's a really low cost to me, right? So there's a bunch of different interesting strategies that you can do, but there's going to be a lot going on this week in the market. If you're interested, you can just join the Discord. I do post all of my positions there, as well as these trade setups as I'm thinking of them. And I also share charts in there as well. So I hope there's a lot of value. Hope you enjoyed this video. A lot to discuss over the next week. Hopefully we're right, but if we're not, then it's okay. We're going to be delayed a little bit longer, but we got a lot ahead of us with all the earnings, Trump's coming into office, and we have the FOMC meeting at the end of the month. So take care, stay safe, and I'll see you in the next one, guys. Peace.